how to research and analyze stocks. Sabri vlog. Researching and analyzing stocks is an essential part of investing in the stock market. Here are steps to help you effectively research and analyze stocks. 1. Define your investment criteria. Determine your investment goals. Clarify your investment objectives, such as long-term growth, dividend income, value investing, or a combination of factors. Set your risk tolerance. Assess how much risk you are willing to take and consider your time horizon for investing. 2. Utilize fundamental analysis. Understand the company. Research the company's business model, products or services, competitive advantages, and market position. Look for information on revenue growth, profitability, and sustainability. Evaluate financial statements. Analyze the company's financial statements, including balance sheets, income statements, and cash flow statements. Look for trends in revenue, earnings, profit margins, debt levels, and free cash flow. Assess valuation metrics. Use ratios like price to earnings, P/E, price to sales, P/S, price to book, P/B, and dividend yield to evaluate whether the stock is overvalued or undervalued compared to its peers or the overall market. Study industry and market trends. Understand the industry in which the company operates, including growth prospects, competitive landscape, regulatory factors, and potential risks. Stay updated with market trends that may impact the company's performance. 3. Consider technical analysis. Study stock charts. Analyze price trends, patterns, and trading volumes using stock charts. Identify support and resistance levels, moving averages, and technical indicators like relative strength index, RSI, or moving average convergence divergence, MACD. Identify entry and exit points. Use technical analysis to identify potential entry or exit points for buying or selling stocks. However, technical analysis should be used in conjunction with fundamental analysis for a comprehensive assessment. 4. Review analyst reports and recommendations. Read analyst reports. Review research reports from reputable analysts or brokerage firms. These reports often provide insights into a company's financial performance, industry outlook, and target price estimates. Consider consensus estimates. Evaluate the consensus estimates of earnings per share, EPS, revenue, and other key financial metrics. These estimates provide an average expectation of analysts and can influence stock prices. 5. Stay informed and research news. Follow financial news. Stay updated with financial news, market trends, and company-specific news that may impact the stock's performance. Regularly read financial publications, follow reputable news sources, and subscribe to newsletters from financial experts. Monitor corporate announcements. Keep an eye on company announcements, such as earnings releases, acquisitions, product launches, or regulatory updates. These announcements can provide valuable insights into the company's operations and potential market impact. 6. Analyze risks. Identify and evaluate risks. Assess both company-specific risks and broader market risks. Consider factors like competition, regulatory changes, technological disruptions, economic conditions, and geopolitical events that may affect the company's performance. 7. Compare peer companies. Compare with industry peers. Compare the company's financial performance, valuation, and growth prospects with its industry peers. This analysis can help identify relative strengths and weaknesses. 8. Keep track of your research. Maintain a watch list. Create a watch list of stocks you are interested in and track their performance over time. Use portfolio management tools or spreadsheets to organize and analyze the data. Document your research. Take notes on your research findings, including key financial metrics, industry trends, and analyst recommendations. This documentation can serve as a reference for future decision-making. Remember that investing in stocks involves risks, and no analysis can guarantee success. It's important to conduct thorough research, diversify your portfolio, and seek advice from financial professionals if needed. Continuously.
Thank you for your joining us. Please subscribe, like, and follow our social media channel. If you feel this information will be useful to you or someone else, please share this video. Comments with your thoughts and questions.